What's going on, you guys? Welcome to Risky Ryan Trades. Well, today was a doozy. After a doozy week and a doozy couple weeks. And what we have here, ladies and gentlemen, is a crime scene. And I think I know who's responsible. Just kidding, but it is kind of interesting that Apple was spared, despite it being big tech and consumer. But before we dive into the wreckage and discuss how to maybe survive the next couple weeks and months in this quarter, which is turning out to be quite volatile, here is my disclaimer. Trading is risky. The content in this video is not financial advice and is for entertainment purposes only. This is my opinion only. Trade at your own risk, etc., etc. And this disclaimer is more important than ever in these down cycles. You know, nobody has a crystal ball. No one can see the future. All we can do is position ourselves the best way using the information that we have in front of us. And obviously the information we have in front of us is there was a market-wide sell-off today. If we take a look just really quickly at these indices, the Dow was down, the NASDAQ was down, S&P was down, the Russell has just got killed over the last couple days. So, you know, once again, mostly flat. All the selling happened while we were asleep. How fair is that? My stop losses never had a chance. And if we take a look at the ETFs, it's very educational. You can see during times of high volatility, the high volatility stocks like the NASDAQ, tech, and semiconductors got hit the hardest, while defensive sectors like healthcare, real estate, utilities, and consumer staples were spared, along with gold and silver. So, what do we do with this information going forward? Well, one thing that we can do, this is a great opportunity to really look at your portfolio and ask yourself, what is my strategy? What ship am I willing to go down on? On days like today, it's really a wake-up call for your portfolio and how it's positioned. What are you comfortable with? What risk tolerance do you have? I know for me, I'm primarily a tech investor. My personal benchmark is the NASDAQ. That's what I want to beat. I'm always trying to beat the NASDAQ. But today has me thinking, what could I do where I could get all the growth of the NASDAQ while having some exposure to these sort of sectors on days like today? And thankfully, you know, about 10% of my portfolio is in Costco, which is a consumer defensive stock, but you can see it behaves like a growth stock. So companies like these, in my opinion, are excellent additions to your portfolio, and they're severely underweight in the S&P 500, in the NASDAQ, even in growth indexes like SCHG and VUG. They lack enough exposure to a company like this, in my opinion. I'm going to be making a video over the weekend on how I am going to be rebalancing over the next quarter so that I can really do some soul searching and kind of retool my portfolio so that I can squeeze all the growth that you get out of the NASDAQ while having names like this and sectors like this that still do okay and absorb the impact on days like today. That video will be coming this week, and I'm very, very curious, if you're watching this, if you could leave a comment below, what is your strategy? How are you changing things going into the next quarter? Or maybe you already had a strategy, and when this happened, you're like, yeah, whatever, like, I'm fine because, you know, I was prepared for this. I would love to see your comments below. You know, what is your strategy? What are your big names? What do you think is going to do well over the next quarter? And how are you positioning yourself? Now, let's dive into the charts. We're not going to go into all of the stocks today because, well, we know what happened. But it is important to take a look at some of the things like the SPY. So in a previous video, you can see this is an hourly chart. And we had been having firm price rejection along this trend line. And we had a descending triangle or wedge, whatever you want to call this. And yesterday we popped right out of it, fell back into it, and then closed above it. And then this morning we fell right out of it. There's nothing you could have done. So don't beat yourself up too much. Don't beat yourself up too much, because everything was saying, hey, this may have been the bottom right here. Multiple times, retesting, and rejecting, only for this to happen today. And so I don't think anybody could have predicted this, so don't beat yourself up about it. I've seen a lot of theories on why. Is it the Middle East? Is it fears of recession? I actually think it's the latter. I think that we don't have until September for the Fed to bail us out. We could have 2 months of terrible jobs data. We could see like, oh yeah, inflation's down and so is the rest of the economy, and the Fed can't do anything until September. And then what are they going to do in September? Give us a quarter point, a half a point? You know? So I'm actually, you know, I think that's what the market is thinking. They're thinking, okay, what good catalysts are we going to have between now and the election? We have nothing but geopolitical issues, and we're riding the line with, are we going to get a soft landing? Are we not going to get a soft landing? Meanwhile, we're really close to like this all-time high of this just massive run we've been on for like the last 9 months. And so you really can't blame Wall Street and people just taking their profits and running and waiting and seeing. And so I think that's what we are experiencing. But at the same time, what if this is the bottom? And that might sound crazy to you, but let's just take a look at this real quick. This is a weekly chart, NASDAQ. You can see here, we closed under Tenkan-sen on the week. We got weekly candles today, folks. It is the end of Friday. And we closed under the 50-week average. Worse yet, on the daily, we closed under the cloud. However, back here, in April, what happened? We closed under the cloud, and that was the bottom. This is like the sell signal of all sell signals, when really you should have bought this candle right here. So in this game, you never really know. You can use these indicators, you can use these tools, and they can, give you an edge. But when it comes to your, like for me, when it comes to my retirement portfolio, I don't want to sell here just to wait for it to get back out of the cloud and give me a buy signal and then buy here, when I don't need this money between now and then. Why would I let it sit in cash? Why not just ride the waves? However, these downtimes are a great time to cycle things around. So if you don't have, say that you don't have enough exposure to tech, now's a great time to like cycle out of your healthcare stocks into tech. You know what I mean? Because you've already absorbed the impact of this with those names, and the ups and downs are much greater in tech. So if you're at the bottom of something that doesn't have high ups and downs and you buy the bottom of something that does, you get what I'm saying? And actually, let's take a look at a chart. I'll demonstrate what I mean. All right, so on this chart, I've got the S&P 500 in black and semiconductors in blue. Obviously, they follow the same ups and downs, it's just to a greater degree. Now, if I were to, let's say that you owned 50% S&P 500 and 50% SMH, semiconductors, and we hit the bottom right here, and you switched out. So the difference is 72 to 227. If you switched out of the bottom, 110 to 279. Or right here, look at the gap between the two. And right now you have, look at this. This is all the way down here. This is only down this much. So these are the times I know, like, you know, for me personally, you should be feeling fear and be scared to touch the highly volatile stuff. But now the damage is done. Or at least a lot of it has been done. And, you know, you could do the wait and see approach and see for us to make a higher high and a higher low. I might consider doing that over the weekend. I'm going to be putting thought into that as opposed to just buying right now. But now really is a great time to think about, what do you want your portfolio to look like? And one of the things that you can do is you go to this website right here, Zacks. You find an ETF that you like, or you just look at the S&P 500, and you look and you see how that is weighted. What you'll notice is that, like, I think 50%, or maybe not in the S&P 500, but like 40 to 50%, something like that, is in the first 2 pages. Like half of the stock market is just these stocks. And then, you know, what you can do is go, okay, I want to track with the S&P 500, so I'm going to have at least this much of all of these stocks. And then from there, you might go, oh, you know, but I don't want any Exxon. Like, I prefer, I don't know, ConocoPhillips or something like that. So you swap this out and you make it your own, so that maybe you can have a personal edge on the S&P 500, but you don't track super far away from it. Or, you know, if you want something like tech, say you're a tech investor like me, VGT, look at this, look how overweight they are. Microsoft, Apple, NVIDIA, they're super overweight. And that's what gives it its high beta. It has a ton of weighting in these names. And so what I'm going to be doing is I'm going to be looking at some of these ETFs. Another one that I really like, other than the NASDAQ, is SCHG. And SCHG has been outperforming the Qs this year. And one of the things that makes SCHG different than the Qs, number one, I think the Qs don't have Meta. No, that's tech. That the XLK and VGT don't have Meta, I'm pretty sure. But they have Eli Lilly. They have healthcare names. See, United Healthcare is 1.6% of the holdings of this. And so on down days, sometimes United Healthcare is up a whole lot on down days. And on up days, it's just flat, you know? So, you know, not to say that United Healthcare never goes down, but you get what I'm saying. This helps to balance out the portfolio. So it's really interesting to go look at the weightings of whatever index that you want to track. And, you know, you can look at charts and go, you know, like, for instance, with this, like the ups and downs of SMH, like I would never have 100% to SMH. Like, I could not stomach, you know, how far does this go down? A 40% drop in my portfolio. Like, yeah. I mean, now the S&P 500 dropped 25%, 27% at one point. But yeah, I mean, like, you gotta figure out what you want in your portfolio, what kind of balance, how much growth, how much dividend, how much this or that. Now, I know this channel is called Risky Ryan Trades, and I'm talking investing, but you gotta have a hybrid approach. You know, you gotta have the mindset, you know, you gotta have, first of all, you should have a retirement account. And, you know, you can trade a little bit in the retirement account. That's what I do. But the overall strategy of your retirement account should be investing. And, you know, times like these really make you think, you know, how do I protect and position myself for the future? And sometimes these big downturns, like, imagine you had a chance to change. Imagine right here on this day, imagine you had a chance to change your portfolio allocation and invest in, say, Meta after it had been just destroyed, or, you know, NVIDIA or something like that, right? What do you think is going to be the next leg? And in my opinion, I don't think there is any end in sight to NVIDIA, to the semiconductors, to Apple. Apple's going to crush it in like starting next year and then into the next couple of years. Like, they're the only company that can put AI in your, in your hand. I know that there's ChatGPT and stuff, but like people love their iPhones. And once they, start to see other people with their wearable AI, it's going to be the fucking rage, and everyone's going to need to have it, right? And Apple's, obviously everyone's going to get excited. Another company that I'm starting to come around to a lot is Meta. First of all, it's founder-led. Mark Zuckerberg built this thing into an absolute behemoth, and he still runs it. He's still young, and it doesn't seem like he is going anywhere at all. And like Meta could be the next Microsoft. It already competes with it. So another name that I kind of like is Spotify. How do you guys feel about Spotify? Leave me a comment below about that. But I know a lot of people that just love their Spotify, and they don't even have a lot of money and they still have that subscription. Okay, let's look at a few more charts. I do want to look at semiconductors while we're talking about it. So we fell through the GAN level here, and we absolutely fell. I don't see, like, this is what's crazy. We're just in no man's land here. Like, we shouldn't even be here. You know what I mean? We shouldn't even be here. Could we see 200, like a pop up to retest the GAN level and then another leg down to the angle? I could see it happening, but I think a lot of it is going to hinge, is there going to be an attack over the week in Israel? I know I said that I think recession fears is like the #1 reason for all of this. That's why the Russell just fell. The whole small cap trade, I think I might be abandoning it at this point, because yeah, you get those interest rate cuts, but I think they're going to be too late. And I think small caps are going to suffer, and large cap growth, they hold up well. So anyways, yeah, so this level right here, 226 on the SMH, on the socks, if you're a socks guy, if you wear socks. So yeah, we fell under the GAN angle here. And that is 209, and we closed under it. So we're going to have to retake 209. Close a candle over that. Yeah, it's an ugly candle. If we close a candle over this, you could set your stop loss right here, and then if it drops even lower, then you try it again. So yeah, let's take a look at Bitcoin. Still in the arc, closed under it, I guess. Let's take a look at the weekly. Closed under the arc and the Kijun-sen. But we've done that before. Oh yeah, we have done that before. We went way lower and then higher. This angle right here, it held up right here. We might have to come down and retest this. And that would put us at 58,000 again. So, could happen. Might not happen. Might find support down here and push higher. But yeah, I regret to inform you, we fell out of the arc once again. So, anyways, I'm going to keep this one short. I'm not going to go through every Mag 7 stock. Like what you invest in at this point, it's it was a crime scene today. So, it's really about long-term focus after a day like today. So, leave a comment below. How are you rebalancing your portfolio, if at all? And how is it already balanced if you already like how it is? And if you could hit me with that like button, of course, I appreciate that. And if you want to see that video of what I come up with to kind of create an all seasons growth portfolio, why don't you go ahead and hit the subscribe button that's appearing right now. And that is it until next time. Thank you for joining me. Risky Ryan out.